Welcome to the deep dive. We're going to take a look at Redfin's latest quarterly report,
Oh, yeah, red dot.
the one that covers everything up to September 30th of this year.
Yeah, they're really in the midst of a major tech transformation right now,
That's right.
while also trying to stay afloat in a housing market that, I don't know about you, but to me, it feels like a roller coaster.
Oh, absolutely, yeah.
It's a crazy time.
And you know what? A lot of you have been asking for the inside scoop on Redfin's financial health,
Yeah.
what their big picture strategy is.
Mm-hmm.
So that's what we're going to deliver today.
Absolutely.
Surprising discoveries, key takeaways,
That's what we're all about.
what it all means for you, whether you're thinking about buying a house, investing, just curious about the future of real estate.
Well, we'll be breaking down Redfin's financial report, and trust me, there is a lot to unpack.
Oh, I bet.
It's a dense one.
Yeah.
This is your shortcut to understanding what's really going on with Redfin.
All right, so first things first, we got to talk about the elephant in the room.
Yeah, the big one.
The economy has not been a friend to the real estate market lately.
Not at all.
Higher mortgage rates, inflation worries, it all adds up.
Absolutely. And all of that economic uncertainty trickles down and impacts companies like Redfin.
Yeah.
It's a tough environment for anyone in the real estate business.
Yeah, it's interesting because Redfin's had to make some, pretty difficult choices to adapt, right? Like reducing their workforce by a whopping 40% since April 2022.
Oh, yeah. That's a lot of change in a short amount of time.
That's a huge amount of change.
Yeah, it shows just how committed they are to weathering this storm,
Right.
batten down the hatches,
Yeah.
adjusting the sails to navigate these choppy economic waters.
Yeah, but here's the thing. Despite all those challenges, Redfin's overall revenue actually grew by 5% compared to last year,
That's right.
reaching a pretty impressive $798.6 million.
Which is a great illustration of how diversification can help a company stay resilient. If we break down their revenue by segments, I think you'll see what I mean.
Okay, yeah, let's dive into those segments.
Okay.
Starting with rentals.
Sure.
Now, we all know that renting has become more and more popular
Oh, absolutely.
lately, and Redfin's rental segment is reflecting that trend.
Mhm.
12% jump in revenue.
That's right. And think about it. As interest rates make buying a home more expensive,
Yeah.
renting suddenly becomes a much more appealing option for a lot of people.
Oh, for sure.
Redfin's tapping into that shift.
Yeah, it's a smart move.
It is.
But what I find even more interesting is that even their mortgage segment is holding its own with a 2% increase in revenue.
Wow.
And that's despite the whole high interest rate environment,
Yeah.
making it tougher to get a mortgage.
It really is. They are finding a way to make money even in a market where fewer people are buying homes.
Right.
And a large part of that has to do with how they're managing their profit margins.
Okay, hold on. Now explain profit margins.
No, sure.
For those of us, and I'm including myself in this group, that
Of course.
don't speak finance, what does that really mean?
Think of it this way. How much money a company actually keeps
Okay.
from each dollar of revenue after they pay for all their expenses.
Okay.
Redfin's overall profit margin went up to 35.3%,
Okay.
which means they're keeping more of their earnings than before.
So even though the real estate market is a bit, shaky,
Yeah,
they're figuring out how to squeeze more profit out of each transaction.
that's right. It's impressive,
That's pretty impressive.
especially considering the climate.
Yeah.
And it's even more interesting when you look at the profit margins of their different segments.
Okay.
For example, their mortgage segment saw a huge jump in profitability.
Okay. Yeah, you mentioned something about basis points earlier.
Right.
And I have to admit, I kind of glazed over a bit.
Sure.
Can you break that down for me?
Of course. Basis points are just a way of measuring changes in percentages.
Okay.
So when we say their mortgage segment's margin jumped by 540 basis points,
Okay.
it means their profitability in that area increased significantly.
Gotcha. Okay.
Yeah.
That makes more sense.
Good.
So is this a sign that mortgages are becoming a more important part of Redfin's business?
It's definitely something to watch.
Okay.
They're clearly finding ways to make mortgages profitable, even in a challenging market.
Right.
And this could be a key to their success moving forward.
But not all segments are performing equally well, right?
Yeah.
You mentioned that their real estate services segment saw a slight dip in revenue.
Right. That segment, which includes their traditional real estate agent services, saw a 2% decrease in revenue.
Okay, and is that just because people are buying and selling fewer homes overall?
That's likely a big factor. Remember those economic headwinds we talked about?
Yeah.
Well, they directly impact how many people are willing to jump into the housing market.
It all makes sense.
Right.
And it looks like Redfin's diversification strategy That whole not putting all their eggs in one basket approach
Mhm.
might be helping them stay afloat.
It's definitely a smart strategy.
Hmm.
And they're not just relying on the traditional real estate model. They're also pouring resources into technology, which is a whole other layer of their story.
Yeah, that's what really sets Redfin apart, I think, right?
I think so too.
They're not just a real estate company, they're a tech company as well.
And that's where things get really interesting
Yeah.
because those tech investments could end up being their secret weapon in this ever-changing market.
Okay, so let's dive into those tech investments and see what they're up to.
All right, let's do it. Redfin isn't just dipping their toes in the tech world. They're diving head first.
Okay.
They're building this whole ecosystem of tools and platforms.
Okay, so what are they building? Give us the details. Are they trying to create a one-stop shop for all things real estate?
That's a great way to put it. They got their main website and app for browsing listings, but they've also got virtual tour capabilities online, offer submission, and you can even get pre-approved for a mortgage right there on their platform.
It sounds like they're trying to make the whole real estate process,
Mm-hmm.
which we all know can be notoriously complicated, as smooth and streamlined as possible.
Exactly. And to help you make more informed decisions, they've integrated information like school ratings and neighborhood data. Imagine having all that at your fingertips when you're house hunting.
That's super helpful. I remember when I bought my first place, it felt like I was constantly juggling different websites and spreadsheets, but they aren't just focused on the consumer side of things, right? What about the agents?
You're right. They're not neglecting their agents at all. They've heavily invested in tools for their agents, too. They've got a specialized customer relationship management system, CRM for short, marketing automation tools, and even AI-powered pricing algorithms.
AI for pricing houses, that sounds futuristic.
It is, and it shows how serious they are about using tech to give their agents an edge.
Mm-hmm.
Remember we talked about their workforce reductions? Well, those tech investments are helping them boost efficiency even with a smaller team.
It's a fascinating blend of human expertise and cutting-edge technology.
I think so, too.
But let's talk about the elephant in the room. These tech investments have to be costing a fortune. How is that impacting their bottom line?
Well, remember how their technology and development costs actually decreased year over year?
Uh-huh.
It's a good sign that they might be getting more efficient with their tech spending.
And that whole amortization thing you mentioned earlier, where the cost of the rent acquisition are off their books now, that probably helps too.
Absolutely. It'll be interesting to see how their tech spending evolves as they roll out new features and continue to innovate.
Mm.
It's a delicate balance. They need to invest enough to stay ahead of the curve, but they also need to watch their expenses.
So how are they walking that tightrope?
They're data-driven to the core. They're constantly analyzing things like user behavior, market trends, and the effectiveness of their different tech initiatives.
So they're using data to figure out what's working, what's not, and where to focus their energy and resources.
Exactly. And this data-driven approach is really setting them apart from some of the more traditional players in the real estate world.
They're embracing the power of data, and it could be a game changer for them. But let's move on to another piece of the puzzle you mentioned earlier, that Redfin is also in the mortgage business now. Tell us about that.
Right. They're not just helping people buy and sell homes. They're also helping them get mortgages, which makes a lot of sense when you think about it.
It does, but remind me, how did they get into the mortgage game?
They acquired a company called Bay Equity, a mortgage lender, which gave them a much bigger presence in the mortgage market.
Ah, that's right. It was a big move that made headlines. So is that part of their business thriving, or is it struggling like the rest of the mortgage industry?
Well, the overall value of their mortgage originations actually dipped a bit in the first 9 months of this year compared to the same time last year.
Again, not surprising considering how those high interest rates have been making it harder for people to get mortgages.
You got it. But here's the interesting part. Even though the total value of mortgages originated went down, the actual number of mortgages they originated went up. This suggests they might be focusing on smaller loans, maybe catering to first-time homebuyers who are looking for more affordable options.
It's all about adapting to the market, and if they can make smaller loans work for them, it could be a brilliant strategy.
Exactly. They're finding a way to stay relevant even in a market that's less than ideal. And remember that big jump in profit margin we discussed earlier.
Yeah.
That applies to their mortgage segment, which means they're figuring out how to make those mortgages more profitable.
So while the mortgage business might be facing some challenges, Redfin seems to be finding ways to not only survive, but actually thrive.
That's right. They're using data to spot opportunities, adjust their game plan, and manage their profit margins effectively.
It's proof that even in a tough market, there are ways to come out on top.
Absolutely. Redfin's showing us how it's done by leveraging technology, their data-driven approach, and their willingness to adapt to whatever the market throws at them. But let's not forget about those lawsuits we mentioned earlier. They could have a major impact on Redfin's future.
Right, those lawsuits against the National Association of Realtors, the NAR, are still ongoing.
And those lawsuits are about more than just Redfin. They're about challenging long-standing industry practices and potentially reshaping the entire commission structure of the real estate world.
That's a big deal. What exactly are those lawsuits about and what's at stake for Redfin?
At the heart of it, these lawsuits center around real estate commission practices, particularly the way commissions are split between buyer's agents and seller's agents. Redfin has long advocated for a more transparent and consumer-friendly commission structure, and these lawsuits are a way for them to challenge the status quo.
So they're not just fighting for themselves, they're fighting for changes that could benefit consumers in the long run.
Exactly. They believe that the current commission structure is outdated and often inflates costs for buyers and sellers. They're pushing for a system that's more transparent and allows for more competition, which could potentially lead to lower commission fees overall.
But the NAR, they're a powerful force in the real estate industry. What are their arguments against Redfin's claims?
The NAR maintains that the current commission structure ensures fair compensation for agents and protects consumers by maintaining a high level of service. They argue that a more competitive commission structure could lead to a decline in service quality and potentially harm consumers in the long run.
It's a complex issue with valid arguments on both sides. What are the potential outcomes of these lawsuits, and what could they mean for Redfin and the industry as a whole?
Well, if Redfin wins, it could force the NAR to make significant changes to its rules and practices, leading to a more competitive and potentially less expensive real estate market for consumers. However, if the NAR prevails, it could reinforce the existing commission structure and make it more difficult for companies like Redfin to disrupt the industry.
So the stakes are high, and the outcome of these lawsuits could have far-reaching consequences. It's a reminder that even with all their data technology and strategic maneuver in Redfin is still operating within a complex legal landscape that could shape their future.
That's a great point. And it's also a reminder that even with all the data in the world, sometimes it's those unpredictable external forces that can have the biggest impact on a company's trajectory. But despite these challenges, Redfin is forging ahead with its ambitious plans. Remember we were talking about their mortgage business? Well, there's another aspect of that business that's worth diving into.
Okay, let's hear. What else is happening in their mortgage world?
It has to do with something called mortgage service and rights, or MSRs for short.
Okay.
They represent the value of service in a mortgage loan, which includes things like collecting payments, handling escrow, and managing defaults.
Got it. So Redfin is involved in service in the mortgages they originate.
Exactly, and those MSRs can fluctuate in value based on market conditions, making them an interesting asset to track. Think of it like this. Imagine you own a rental property, and you hire a property manager to handle all the day-to-day tasks. The value of that property management contract would depend on factors like the rental market and how well the property manager performs. MSRs are similar in that their value is tied to the performance of the underlying mortgage loans.
That makes sense. So how are Redfin's MSRs performing?
Well, at the end of 2023, their MSRs were valued at a healthy $32.2 million. But by September 30th of this year, that value had dropped to $2.5 million.
Whoa, that's a steep decline. What caused that?
It's likely due to a combination of factors, including a rise in interest rates and faster prepayment speeds. When interest rates go up, people are less likely to refinance their mortgages, which reduces the value of MSRs. And when borrowers prepay their mortgages, it cuts short the income stream that MSRs generate.
It sounds like these MSRs add another layer of complexity to Redfin's financial picture.
They certainly do. And Redfin even decided to sell a portion of their MSRs to Freedom Mortgage Corporation earlier this year.
Is that a sign that they're concerned about the future value of their MSRs?
It could be. It suggests that they're actively managing their MSR portfolio and looking for ways to mitigate potential losses.
So these MSRs are another piece of the puzzle that savvy investors are watching closely.
Absolutely. How Redfin manages these MSRs and how their value fluctuates could offer valuable insights into their overall financial health and strategic direction.
It's another reminder that Redfin's story is about much more than just buying and selling houses. They're playing a complex game with a lot of moving pieces.
Exactly. And their success depends on their ability to understand and navigate all those moving pieces, from their core real estate business to their tech investments, their mortgage operations, and even the legal landscape.
They're a company that's constantly evolving and pushing the boundaries of what's possible in the real estate world.
And their journey is far from over. But speaking of pushing boundaries, let's shift our focus back to their tech strategy.
Yeah.
It's clear that Redfin is betting big on technology, but what exactly are they doing that's so unique and potentially disruptive?
Yeah, let's peel back the layers of their tech strategy and see what's really going on behind the scenes.
Are you ready for a deep dive into the world of Redfin's algorithms, digital platforms, and their vision for the future of real estate?
Absolutely. I'm always up for exploring the cutting edge of technology.
Then let's explore how Redfin is using technology to empower consumers, streamline transactions, and redefine the role of the real estate agent.
Sounds fascinating. Lead the way. Okay, you've got my curiosity piqued. What are some of the specific ways that Redfin is using technology to kind of shake things up in real estate?
Well, one area where they're really innovating is with their 3D home tours.
Oh, yeah.
Instead of static photos or even those basic video walkthroughs, Redfin is using cutting-edge technology to create immersive 3D models of homes. Imagine being able to virtually walk through a house. Explore every nook and cranny, even get a feel for the flow of the space, all from the comfort of your couch.
That's amazing. I remember when I was house hunting, just trying to piece together a mental picture of a place based on a handful of photos.
Right.
This 3D technology would have been a game changer.
It really would have. It's a great example of how Redfin is using tech to really enhance the customer experience.
Yeah.
But they're not stopping there.
Okay.
Their innovations go beyond just the visual aspect.
Right.
They're also using AI to personalize the home search process.
Oh, wow.
Their algorithms learn your preferences based on your browsing history and search criteria.
So they're paying attention to what you're doing online.
Exactly.
Okay.
And then they can recommend properties that you might not have even considered.
Wow. So instead of just sitting through all those endless listings, you're getting tailored recommendations
That's right.
that match your unique needs and tastes. That's super smart.
That's right.
It's like having a personal real estate assistant in your pocket.
Exactly. It's all about empowering consumers to make more informed decisions.
Yeah.
But Redfin's tech strategy goes beyond just helping buyers.
Okay.
They're also using technology to kind of revolutionize the way their agents work.
Oh, I'm all ears. Tell me more about how they're using technology to give their agents that competitive edge.
Okay, well, for starters, they've developed this whole suite of tools that automate a lot of the time-consuming tasks
Oh, okay.
that agents traditionally have to handle, things like scheduling showings,
Uh,
managing paperwork, even generating marketing materials.
okay.
And this frees up their agents to focus on what they do best,
Yeah.
building relationships with clients
Yeah.
and providing that expert guidance.
It makes sense instead of getting all bogged down in the administrative work.
Exactly.
I can focus on the human side of the business,
Right.
but they're not replacing agents with robots, right?
No, not at all.
Hmm.
Redfin believes that technology should complement and enhance the role of the agent, not replace them entirely.
Yeah.
They see technology as a way to empower their agents to be more efficient, more effective,
Right.
and ultimately provide a better experience for their clients.
Okay, I like that approach, this kind of blend of high tech and high touch.
It's a good balance.
Yeah, but we got to remember those lawsuits against the NAR, those legal battles could have a major impact on Redfin's future
Right.
and potentially reshape the entire real estate industry.
Absolutely. Those lawsuits are about challenging the status quo
Yeah.
and pushing for a more transparent and consumer-friendly real estate market.
Mm-hmm.
The outcomes of those lawsuits could have far-reaching consequences.
It's a good reminder that even with all the data, the technology, all the strategic brilliance, there are still all those external forces that can really influence a company's trajectory.
You're absolutely right.
But despite all these challenges, Redfin seems determined to forge ahead and chart their own course.
They're not afraid of a challenge.
They're not afraid to take risks and to challenge conventions, push the boundaries of what's possible.
I admire that.
Me too. So what does all this mean for our listeners, whether you're thinking about buying or selling a home, or you're just curious about the future of real estate? Redfin's story offers some valuable insights.
It really does. It shows the power of technology to transform industries, the importance of adapting to changing market conditions,
For sure.
and the courage it takes to challenge the status quo.
Absolutely. So as we wrap up this deep dive into Redfin's world,
Yeah.
I want to encourage you to keep exploring, keep asking questions, and keep diving deep into the topics that matter to you.
That's what we're here for.
Yeah, because knowledge is power. And in a world that's constantly changing, the more you know, the better equipped you'll be to navigate the challenges and seize the opportunities that come your way.
Couldn't have said it better myself.